only mode.
Good evening, everyone, and welcome to Admiral Markets webinar of 31st of July 2014. Today, me and Chris will present you what we've been talking about some months ago. That was Forex Terms and a little bit about August trading. You probably know that this is the last working day basically for me. Tomorrow will be the last working day, but I will be making a break till second half of August. And actually, this is a webinar where we will talk about Forex terms and a little bit about August trading and why you should take a break in August. Before we begin, our standard is disclaimer. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. There is disclosure statement stating all possible risks associated with Forex market. By accepting the disclosure statement, you're also proceeding further with us. And Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only, and this webinar is for informational and educational purposes only. So, with having said that, I will begin with Forex terms and August trading. I hoped before I begin that you actually traded today. Maybe this was the last day for you, but also this was actually a great day to trade. As you can see daily analysis. You can see that GBPN actually went quite off POC1 couple of times, so you could have made a lot of money just trading GBPN. So 31st of July, actually, I remember also the last year of July, it was very good for me. And it's actually, these last 2 months were just almost perfect. So we will talk about, as I said, Forex terms and August trading. Let's begin with A. So Forex terms, all or none. There is a limit price order that instructs the broker to go ahead with the whole order at the price or not at all. Then we have Andrews method, a technique which is developed by Dr. Alan Andrews for identifying the upper and lower parallel lines of a trend. Appreciation means that a currency appreciates when the price rises or strengthens. Ask. Many traders just do not know what ask is. Ask is where the price at which a dealer and trader is willing to sell a currency. So the price at which a trader can buy a currency. Ask price or ask rate is the lowest price at which a currency is offered for a sale. APP or Asset Purchase Program is Bank of Japan initiative which was introduced in 2010 as a monetary easing tool where it buys government bonds with up to 3 years until maturity and trust funds investing in stocks and property. Aussie is a market term for the Australian dollar. B. Back office is the department in the back office which deals with financial transactions. BIS or Bank for International Settlements, you probably have heard about the term. That is an international organization which fosters monetary and financial cooperation and serves as a bank for central banks. So that is the main bank for central banks. The BIS often acts as an agent in the Forex market, allowing central banks to mask their identity in an attempt to dampen market impact. BIS, Bank for International Settlements. Bar chart, that is a chart which shows the currency prices which each bar. It's in contrary to candlestick and to basically a line chart, which I don't know if anyone uses a line chart. BOC is Bank of Canada, BOE is Bank of England, BOJ is Bank of Japan. Barrier option is a type of option whose payoff depends on whether or not the underlying asset has reached or exceeded a predetermined price. So that is barrier option. You probably have heard many times so far about barrier options. Base currency is the first currency in a currency pair. So when we have euro dollar, euro is the base currency. So the first currency in a currency pair. That means the dollar is counter currency. Bear market, it's a market where prices are constantly declining. BE or break even when trade is stopped for a no loss after some profit. So actually, if you put your stop to break even, that means you won't suffer a loss. If you put your stop loss to break even plus something, that means that you're effectively trailing the stop. Bid is the price at which a dealer or trader is willing to purchase currency. Also, it means that the price at which a trader can sell the currency. So, you know, bid, ask. Big figure is the first few digits of an exchange rate. Book in Forex terms means a summary of a trader's desk's total positions. And bull market means a market where prices rise constantly. Cable is the market term for British pound dollar. Central bank is the organization that manages their country's monetary policy. Carry is dollar CAD. Call rate is overnight interbank interest rate. It's called call rate, so overnight interest rate. Candlestick chart, you know what candlestick chart is. Clearing process of selling a trade. So when your trade is cleared, that means that it has undergone a process of settling a trade. Commission is a transaction fee charged by the broker. Contract is a standard trading lot, usually 100,000 units of the base currency. Country risk is a risk associated with cross-border transactions determined by legal or political activity. Cover is a close out of foreign currency. That means to close out a foreign currency trading position. So we know about short covering, about long covering, and that means that we are basically closing a position, cover. Cross rate is the exchange rate between two currencies where the currency pair in the country that the original quote came from. Currency is money issued by the government or central bank. That is a currency. Cash. Day trading is opening and closing positions on the same day. So that is day trading or intraday trading. Dealer is a person who acts as the middleman for a transaction, placing the buying or selling orders. Deficit is a negative balance of a trade. Delivery is a forex trade where an actual delivery of currencies traded is made. Depreciation is decline in the value of currency. Devaluation is a deliberate adjustment of a currency's value, usually by the central bank or government. Downtrend is when price moves downwards. Dow theory, used by analysts to check the direction of the market prices. You know, and you probably heard about Dow theory. Dragon is GBP pair, which we have successfully traded today. Easy or easing refers to monetary policy which tends towards lower interest rates. So usually when we talk about easing, we are talking about lowering interest rates. Economic indicator is a measure of strength or weakness of a country's economy. Let's say employment rates, inflation. ECB is European Central Bank. ECOFIN is a council consisting of the economy and finance ministers of the European Union. ECOFIN meetings, you know from the calendar, they usually meet once per month. European Monetary Union was set up to establish a single European currency, euro, EMU. So it's European Monetary Union. Exchange rate is the value of one currency quoted in the terms of another currency. Euro dollar, GBPN, that is exchange rate. Fade, that means to trade counter to. To fade a trend is to counter the trend. To fade a rumor is to believe it to be untrue and do the opposite of what the rumor would suggest. Sell the rumor, buy the fact, usually. Fiber is euro dollar currency. FX or foreign exchange, it doesn't mean just what we are trading, but basically when you are at the airport, let's say when you're going where you want to travel, you usually need to exchange your money for that particular country's currency. So you go to foreign exchange. Forward is a deal that will commence on an agreed date in the future. Forward points, those are the pips or points added or subtracted for the currency exchange rate to calculate the forward price. Fundamental analysis, it's the analysis of economical or political information to determine future movements in the financial markets. Gross domestic product, or GDP, is the measure of a country's economic growth. GDC, or good till cancelled, is a trading order that remains within the dealer until the trader cancels it. You can see this GDC also on your mobile trading platforms. It usually says GDC. Hawkish means a statement regarding monetary policy which implies tighter policy. Usually higher rates. Hedging, it's an investment that reduces the volatility of your portfolio by undertaking one investment activity to protect against loss in another. So let's say you are buying euro dollar, but you're also selling dollar Swiss. So actually you're protecting. The thing is, I don't recommend hedging, and that is not the way I trade. I just cannot remember when I did a hedge position. And I think for me, I just don't need to hedge anything. When you have a stop loss, why would you hedge? High, low, highest traded price and lowest trading price for the current trading day. That is high and low. Inflation is where there is a rise in consumer goods and services. That means that purchasing power is reduced. It's not good for a country, but also deflation is not good for a country's currency. That is why central banks usually intervene on foreign exchange market when those things happen, inflation or deflation. Initial margin is the deposit required by a broker for a trader to execute currency trades. Interbank rates are the forex trades that international banks quote from other large international banks. Kiwi is market term for New Zealand dollar. Leverage is the ability to trade with borrowed funds. The trader can then gain more profit but also lose more. Standard trading thing. Limit order, it's an order to buy below a specific price, specified price, or to sell above a specified price. Limit, buying order, pending, selling, whatever. It's a limit order. Long is to buy a currency expecting to sell it at higher price. It's an opposite for short. Lot is a standard trading contract, usually 100,000 units of base currency. Major currency is a more frequently traded currency. You know what major pairs are. Dollar, GBP, Euro, Yen. Margin is the amount of deposit that a broker requires a trader to keep in their account to cover losses. Margin call happens when a broker needs you to put additional funds into your account to bring the margin up to the required minimum level. Margin call, that is what you should avoid at any cost. Market maker is a dealer or broker who is prepared to buy or sell at stated prices. Market order is an order from the trader to buy or sell at the best price available. Market timing is using technical tools to time exit and entry moves. Trend is the direction in which currency prices, that's market trend or trend, where currency prices are moving at a time. And minor currency is lesser traded currency. You know what minors are, but you also have minor crosses, which can be GBP, Swiss yen, and so on. All other Forex terms will be presented by Chris after I finish with a few words about August trading. So Chris will tell you from N to Z those Forex terms. As you probably know, August is a month where we really don't have a big volatility. Usually traders use their vacation and use that lack of liquidity to go and, as I said yesterday on webinar, to charge up the batteries. We also know the banks are on holidays, because big banks, when banks are on holidays, there are no one to defend those levels. So usually you can just imagine prices go from in a channel. This is a channel. The thing is, if we see a channel, then we probably know that there can be a breakout happening in one single direction. The thing is, if banks are on holidays, next level might not be so well kept. So the thing is, the price can collect stops above the level, and then bang, it can go back. It's called fake out. So usually when we see range during the August, that will probably mean that it will happen, let's say false breakout can happen. And that happened many times in August. And I have witnessed that many traders who were actually profitable during the year lost a lot during the August. Simply, there is no big trend. The price tends to range, tends to go whipsaw, and the worst thing is false breakouts and false retests. So you know what breakout, pullback, continuation is. In August, you can see breakout, pullback, sign of continuation, but then drop in the range. False breakouts, false retest, because banks are on holidays, smart money is on holiday, big boys are on holidays, and simply put, we don't trade. I actually prefer August because I can go on holiday freely, safely, knowing that the market is preparing for September volatility. No, Jackson Hole meeting gives, I don't think it will, well, it will happen in the second half of August. So actually we might see some volatility in second half of August, because then we have a preparation for September. This will not continue in September. I think September will be volatile, if not highly volatile. So actually the second part of the last 5-6 days of July and the first 15 days in August are great to, if you want to go to vacation, if you want to use your holiday, that is a time when you should plan your holidays. So last 10 days, last 7 days of July and first 2 weeks in August. The thing is, it won't continue in September. September will be volatile, because September is also when usually when firms are back from holidays, when banks are back from holidays, and when smart money will flow in the market. Lack of volume means that we have small moves and low range. But when a move happens, there isn't enough volume to slow it down, so it's over very quickly. So actually, lack of volume is a lack of trading activity and lack of making money. You should know that if you want to trade August, you need to be prepared for a slow movement, for maybe non-trend, strange movements, and so on. So actually, we will have NFP tomorrow. It will be volatile, but it's the first day of August, is the last day of trading week. And if you want to heed my words, just take relax. Why would you risk anything? Why would you risk more? You don't have to. There will be many more months to come, many trading days where we can make money. Try to enjoy holidays. Try to enjoy, as I said, with your families. Try to catch sun, good vibrations. Try to think positively. And you know, when you think positively, usually good things will also come to you, because you are actually drawing positive energy. If you want to go on mountains, it's okay. If you want to go visiting the sea, it's okay. I prefer to be, as you know, on sun. And just August is the perfect month to relax from all those stresses you had in your life for the past 11 months. And believe me, if you didn't make money during, I know, last couple of months, it will be much harder for you to make money in August. But I think because you usually listen to my and Chris webinar, you're following those signals, basically analysis, session recaps, and so on, live trading rooms. I think that you actually make some money. So try to keep that money for yourself. Go and buy something for you, or at least keep that as investment. Because the thing is, if big banks do not trade, or big boys, there is nothing for us in the market. And I just simply want to relax, with no obligations, I just don't have a business plan for August. And you know, Forex is business when you need to have a business plan. My business plan in August is to have a nice vacation far away from my country, or far away from trading. At least those 15 days will come in handy. And that is usually annual pattern. Yes, right. Because August is a month, you know that I am telling you that when vacations are taking place, holidays, and where smart money just does not flow. You will see, I advise you to go and relax, because it's not just about trading. Whatever you do for your living, you need to relax. You need to charge up the batteries. You go and have fun, always keeping polite, but the thing is, you need to be prepared for September. September will be a month where many breakouts will occur, where volatility will be back, and actually you don't want to catch September unready. So you need to be ready for September. If you're not ready for September, you may suffer a consequence. So stay away from screen, go out, enjoy yourself, and live a healthy life. That is what I wanted to say. And actually, I'll be back on 19th of August with session recap. I wish you all happy holidays. I wish you all happy trading. I will see you, I'll check you back in 20 days. And I wish you all many green pips in upcoming second half of August, and of course from September and on. I will hand over a presentation to Chris now. And actually, yeah, Yves, thank you, and thank you everyone for good wishes. Yes, and yeah, Jeff Moore, exactly. You also have, all of you, I want you to have great time. I want you to be healthy. I want you to be happy. And I will talk again with you soon. Now, Chris will continue, and listen to these words, because I know what I'm talking about, and I always wish you the best. Cheers, guys.
Thank you so much. Great stuff. And we're going to take a look now at the rest of the letters, and then I will share my view about August, September, and the rest of the year as well. Let's see. First of all, get this screen sharing going. Good. So, just a continuation of the O as we continue with this the DDD words that are commonly used in Forex and trading. OCO, order cancels the other. Basically, when an order gets executed or gets taken in, this automatically then cancels another one that is pending. This could be, for instance, useful, although I don't use it myself, but in theory it could be useful for others maybe when they are looking at a potential triangle, for instance, a wedge, a consolidation zone, and they want to trade it to both sides. But they only want to trade it to one of the two sides. So that could be useful. Then if the price pushes through that level, it automatically then would take away the order at the other side. This is useful, of course, because if you have two orders on both sides and the market makes kind of weird, let's say weird NFP spike up and down, it could take both trades out for a loss. And, you know, that can happen. NFP, for instance, as we all have it tomorrow, could easily make something like this, flat, a spike up, a spike down, another spike up, and then still move down, and take stop losses on both sides. You know, that it can be sometimes that volatile. So that could help with that part of it. The offer, the ask is something that I've already talked about, a price which the dealer is selling. An open order is very simple. Obviously, it's the order that we have open at the time where we have in the market. That's something that is right open right there. Pegging is something that happens when a country makes sure that its currency is fixed to another currency. You often see countries that peg their currency to the US dollar, for instance. You sometimes even see that to the euro as well. So, you know, that's basically when you have a fixed rate. The Swiss franc, for instance, pegged their currency against the euro for a while, right? When it was flat at 121, wasn't it? So that's pegging. When a country says, no, I don't want any fluctuation, I'm making sure it's the same. A pip, obviously, very familiar, very famous for us because it's the smallest increment we're trying to make, pips, and then it is always referring to green pips, so that's clear. Position is basically the amount of currency that we've taken when we've taken a position in the market. The pound is referring to the British pound. I have a bit of a spelling typo there. It says British. That's incorrect. It's British pound. Pricing currency, the second currency in the pair, so your dollar, pricing currency is the dollar in that case. Quote, the bid and ask price, quoting currency. This is the second currency in the pair as well. The R of rate is the price for one currency pair compared to the other. It's quite logical, the rate of the pair. Revaluation, the central bank is increasing exchange rate for a currency. Revaluation, so it's saying it totally has a different, it's kind of intervening. Risk capital is the trading capital, simple, right? That's what our risk capital is. That's what we want to put on the line and potentially could lose. That's why we're always referring to the higher risk investment warning at the beginning of our webinars, right? We want to warn that traders should only trade with the risk capital, and we should be aware that there's a chance that we can lose all of that risk capital or substantial parts of it or smaller parts of it. Regarding the reallocation, by the way, of course this is something similar. Well, it's not exactly the same, but I'm not sure if Ned had mentioned it when he was talking at the beginning about it, but the Argentinian currency pair is, of course, in a trouble at the moment. It couldn't find an agreement with a smaller group of debt holders, about 10%, the other 90% had already agreed with the trimming of the debt repayments that Argentina had to make based on the default they made in 2001. But couldn't find agreement with some bigger U.S. investment firms. Apparently, I've heard from the media at least. But you know, they wanted their full money. If Argentina would have done it, they would really not be able to repay it apparently. So they're going to default probably on their their loans. So this obviously has a tremendous effect on one's currency too. That's something similar to reevaluations, devaluation, but I guess. But risk management is a technique to monitor and control risk. That's something we discuss often and mention how important it is together with strategies and money management and technical analysis, of course, and trading psychology. Rollover is the difference of interest rate. So basically, all currencies have their own interest rate settings in a way, right? The Kiwi has 3.5, the Aussie has 2.5, the Euro has 0.25, the dollar less than 0.25. So there's a differential there, and the rollover is basically the gain or loss depending on the difference here. S, I don't have it there actually, but the S of strategies, obviously. Strategies, Forex strategy is very important for us. But a lot of things that are quite familiar for us, the sell order, the sell limit order. A sell, of course, is an open position. We have a sell, or we are going to sell, but a sell order is a specific type of order where we're trying to sell below current market price, sell stop order, or sell limit order is where we're trying to sell above current price. A short, another word for sell, spot price is the current price. Spread, of course, the difference between the bid and the ask. Speculation is where traders are trying to gain upon price fluctuations. Sentiment is the actual exchange of the trade, the settlement. The sterling is the British pound sterling. It's a nickname. A stop order, basically type of order here where we are selling below the market. Stop loss order is where we are having our exit. Stop loss, where we have our exit. Swap, indeed, same as rollover. Yes. As far as I know, I don't see any difference. Maybe there is technically, but I would have to double check. Not as bad. Not as far as I know, at least. And the Swissy is the nickname of the Swiss franc, specifically the dollar Swiss franc. Stop loss orders, of course, very important because without it, we're literally risking all of our risk capital. Now, for some who are trading maybe very long-term strategies, and take a very small position. Sometimes they don't take that stop loss order because their leverage is so small, and they have, let's say, a mental stop of 500 pips away. Let's say someone's shorting at 135, and they want to close it around 140, and they're taking a mini, and they have $50,000. Well, the risk there of losing the risk capital is so small. There are some cases the traders do that, but obviously it's a very, very small minority that do that because most of us have to use leverage because our trading capitals are not big enough to earn a decent amount of money with the capital we have. T, I didn't mention trading psychology, but that is, of course, important, trading psychology. But to finish the story, obviously, the stop loss order is, for all of us, with the exception of 0.0001%, something we always use. And it's just because we have to protect that risk capital. The T, so trading psychology, trading psychology obviously very important to maintain the balance we need to find when walking over the rope, the tightrope from A to B. It's like in the circus, we're basically trying to find our balance when crossing over air on a very thin rope. Well, that basically requires a lot of balance. When you see those people without net or with net walking on that rope, and, balancing from point A to B, that's how basically we're trying to balance our accounts as well. It requires the same skill in the balance. Thin trading, just low levels of trading basically, not much activity going on. The trading is thin. There's thin volume, low volume, etc. That's another nickname, is just thin trading for that particular lower volatility environment. Typically, August would have thin trading, or Christmas time would have thin trading, or public holidays would be thin trading. A tick is just one price movement, right? A market term for a pip or a point, or just one movement. Trading platform like MT4 is the software used for currency trading. And the trend is your friend until it bends. This is when price moves majority of the time in one direction. The last one's an uptrend, is when the trend is moving most of the time in the upside direction. Volatility is a measure of market movement over time. It's often enough if you have high volatility, that means a lot of ups and downs. Lower volatility is more like a thin market in that case, maybe. Whipsaw is when price makes lots of ups and downs. It's basically a very volatile market where price makes sharp movements in one direction followed by a sharp reversal. Whipsaws tend to be bad for trending traders, good for range traders. Yard is a market term for a billion. If you didn't know that, now you have an extra new way of saying, please give me a yard. So August, well, I totally agree with what Ned had said already. Definitely usually slower movements, typical for slower movements. Typically price just consolidates a lot, makes a lot of ups and downs, a lot of spikes, whipsaws a lot, in fact. Not much trending mode, and trends usually start later. The yen trend started in 2012, started after the summer, somewhere in September, end of August, I think, into October. That's when that yen trend started, for instance. So, that's when the market really doesn't move as much. It's maybe not as slow as Christmas. It's not as slow maybe as the last 2 weeks of December, but it's very close to it. I would think that it's still a bit more movement, but obviously not a lot of movement. Certainly not something that we can jump for joy. So what can we do? Well, take a holiday, as Ned said, is perfectly a good reason. And just taking some time off at this point in time, is just the best probably moment you can do without really missing that much. So if there's any point in time where you want to take a holiday, it would be good to do it last week of July or the first 2 weeks of August. So that's one thing indeed. Taking profit earlier, looking at smaller time frames, risking less, certainly risking a lot less, maybe even to demo trading. Well, it depends, right? But certainly reduction of risk is possible. Will this year be the same? Well, because just a pattern doesn't mean the pattern will always repeat itself. So the chance is very high, I would say. Yes. The only thing that piques my curiosity is the fact that the dollar is strengthening at the moment. And there are some, let's say, fundamental figures that are supporting this dollar rally. The dollar recovery, economic fundamental recovery, has been choppy, especially at the beginning of this year. That was blamed due to the seasonal bad weather. We are seeing some recovery from that point. And obviously the Fed has also mentioned some interesting developments of reducing the quantitative easing and even mentioning interest rates. So we're seeing, or we saw the GDP hike up to 4%. We saw wage growth go up from 0.5 to 0.7 today. And tomorrow we have NFP. So it's going to be very interesting to see if the NFP will indeed confirm. Last month we had a very bullish NFP number. So there are signals that the U.S. economy is picking up speed. The Fed was not that excited yesterday as yet, but what I saw from market analysts is that they were actually thinking that the Fed was a bit too cautious with their opinion. So yeah, if this picks up and continues, maybe there is a slight chance that the USD trend potential could maybe make August a bit more exciting than we are commonly used to, at least what I've known and seen from the market the last 10 years or so. I would have to really check, of course, exactly each August and to see if it really was as quiet as I remember it is. Maybe there are some exceptions. I really don't know. Obviously, by heart, all the 10 years of August by heart, but what I can remember is generally definitely quieter. So I don't know. It piques my interest if this year could be an exception. It would go against the logic. It would go against what normally would happen. It would go against the pattern. But just because this momentum is building and the dollar is moving pretty quickly against the pound, against the Aussie, against the Kiwi, against the euro, but it doesn't have to mean that it will continue. It could be the first fall. In August, we get the correction. And September, we get the follow-through of the dollar strength. That could easily happen. Something like, for instance, where you get like a fall like this, for instance, and then August, we can see some kind of like consolidation like that, and then, you know, September, October, November, we get the dollar trend for further downside, for instance, right? That is something that could happen, but it does pique my interest. What could happen with the dollar trend? Other trends that could happen, maybe the yen. I think it's not a high percentage chance, but if it pushes towards the 104 and it specifically goes above it, that would change things. Who knows? Dollar seems more likely, but the yen is in the back of my mind, but not as likely. The Aussie, yes, the Aussie fall could happen maybe, I would say, or the Swiss franc weakness maybe. Euro, well, it could fall against the dollar, maybe some euro weakness as well, as the fundamentals also from a long-term perspective don't look that great for the euro. So pound, I would say, probably could maybe fall against the dollar, but not as much as the euro maybe. So pound, I would say, is the least interesting. If it weakens, it will probably weaken less on average. But yeah, I would be interested in the Swiss franc maybe. But the Swiss franc weakening and the dollar strengthening seems a bit off place. So maybe this, if the dollar trend happens, maybe the Swiss franc trend could happen next year. If the dollar trend happens, maybe the Aussie weakness trend could combine with that development. Obviously, these are just thoughts, just very global, rough ideas, and I don't use them for trading. To emphasize that, I do like to just have ideas about what currencies can do, but it doesn't have any influence on my strategy. My strategy is my strategy. My strategy is I look to the charts for those decision points and confirmations and trade, you know, the swing trades and intraday trades that I want to trade, regardless of that long-term ideas. But sometimes it is good for me because to have an idea like the Aussie last year, April, I saw the Aussie falling from 106 to 94. Well, that maybe helped me a bit with swing trades to capture those pips, and it fell further, as we know. It fell within 2 months indeed, and I called it pretty accurately, that fall. It actually extended further than I expected. The yen back in 2012 was something I expected too, a big uptrend, upswing. That too helped me with my swing trading because I expected the yen to weaken, and that too went a bit further than I expected, but that's okay. That's good. Went all the way up from 75, what was it, 75, 70, right, or something like that, all the way, well, we know it, up to above 100. this big pound uptrend was something that really that I really didn't see coming, to be honest. That much upside. Eventually, obviously, there was a clear pound uptrend in place, so yes, I went along with that uptrend, but it wasn't something that I necessarily was thinking of beforehand. The Swiss franc was something that I was also looking for, indeed, the upside down and upside. Well, that the euro went into such a big consolidation is I guess no one really counts on. So, well, anyhow, just to point something about why I tend to look at these things as well. So to finish this webinar, a bit of, and not to bore you too much about these fundamentals, just a bit of a fun quiz here about the abbreviations, the Forex guide, about these pairs. I'm not going to ask you about all of these pairs, don't worry. Just a couple of them. These are maybe not as known as the majors, like the euro, like the USD, like the GBP, like the JPY, the yen. So who knows any of these? I have a couple of more after this, but I'm not going to ask you about all the currency pairs in the world. For instance, like the Maltese lira, MTL, is not something I asked. And if your currency pair is missing in this quiz, I do apologize. I just didn't want to go through all of them. Like the NOK, the Norwegian krone, is not there. I got a first answer. Eve attempted 3 out of the 4. Good rate. Anyone else want to? Eve does not know SKK. Does anyone know SKK by any chance? Anyone disagree with Eve maybe on the ones he has mentioned? There is a currency called PEN, by the way, P-E-N. It's not one of the ones I asked because I don't think I didn't know it. I don't think many would know it. PEN. That is Peruvian Nuevo Sol. Interesting. Never heard of it. Well, it seems like Eve is the only one participating at the moment. Well, Eve, you did a great job in the first 3. Yes, the SEK is the Swedish. What is it actually? The Swedish. Now I forgot. The Swedish Karuna. I don't know why the E is there. The crown, indeed. Krona, they say themselves. The Zimbabwean dollar, indeed, ZWD. And INR is indeed from India. It's the Indian rupee. Yes, Indian rupee. So we got the Swedish Karuna, Zimbabwean dollar, and Indian rupee. The SKK is the Slovakian crown. And yeah, there are a lot of currency pairs that have the crown, like the Sweden, like Czech Republic where I live, like Slovak crown. Next one's ARS. It almost looks like the abbreviation of Arsenal, the football club from London, but it isn't. BRL, CNY, and MXP. I'm especially thinking that the first 2 will be difficult, probably. But let's see. Eve is fast again. Eve is our all-star currency trader here. As fast as the wind. And says Brazil, China, Mexico. First is Armenia, question mark. Does anyone want to chip in their opinion besides Eve? Is there a second brave volunteer? that wants to throw in their 2 cents or 5 cents? Doesn't seem to be a popular quiz. Sorry about that. Okay, so let me then answer the question, or let me give it maybe a few more seconds then. Okay, let me answer the MXP then. Yes, that is Mexico indeed. Great job. And Mexico has the peso. MXP is Mexican peso. Still no answer, so I'll continue. CNY is indeed from China. Eve is totally spot on. And the Chinese have the yuan renminbi. Yuan renminbi. I'm not sure if I'm saying it correctly actually, but the BRL is indeed Brazil, the Brazilian real. Was strong not so long ago. I think lost some of its value. A lot of money went into it because of high interest rates, as far as I remember. Not that I'm an expert on the Brazilian real. And the ARS is the Argentinian peso. Not Arsenal, but the Argentinian peso. So we have Argentina, Brazil, China, Mexico in this example. In these examples. Last but not least, the ZRA, ZAR, the RUB, and the PLZ. Any ideas? Obviously, many currency pairs were lost with the euro, the Greek drachma, the French franc, the Finnish marka, Italian lira, the Dutch guilder, the German mark, the Austrian shilling, Belgian franc, I'm forgetting something. Let's see, Spanish peseta. So we got Michael and Eve contributing here, and both of you have it spot on. It is indeed, no, ZR, now I'm getting confused. Yeah, ZR, let me check now. Yeah, South American Rand, sorry. I thought, now I got confused with Zimbabwe, but that was actually the ZWD, sorry. South American Rand, South African Rand, sorry. The Russian ruble, and the Polish zloty. Absolutely. Good job, Eve, and also Michael. So I too, well, I don't wish you a happy vacation actually, because I'll be still having 3 webinars next week in the mornings, Tuesday, Wednesday, Thursday. Although, of course, if you are going on holiday, I do wish you a happy holiday, but I mean, I wouldn't do it because of myself. I mean, I will still be there the 5th, 6th, and 7th with 1 webinar in the morning, but we won't have any evening webinars the next 2 weeks. And also the trading lab, I will have a week holiday from the 9th to the 17th. So there will be no trading lab webinars on 12, 13, 14. And then we'll get back into the swing of things from the 19th and start preparing ourselves indeed for that month of September, as Ned already said, and sharpen the tools and the swords so that we're all fresh and ready for trading. And yeah, it is good to take some time off during the year to kind of get the sharpness back. One step away from the charts. It's good to be really heavily involved in the charts, but to step away for a bit to refocus is always good as well, to get some balance again. And then when you go back, everything seems a bit different again, newer, so that's always refreshing to do that. Yeah, it's beach time indeed. Exactly. Are you going anywhere to a specific beach? Staying in your own neighborhood, maybe? Ah, you live near the beach. That's lucky you. Oh, I'm jealous. I live next to a river, which sometimes gives a bit of cooling and a park, but not the same as the sea, indeed. Awesome. So if I'm in Spain, I know where who to visit in that case. Great stuff. It would be party time indeed. Awesome. So I do thank everyone for joining us today with this explanation. It's of course a bit more of a beginner's guide. So if you're more experienced, then this could have been maybe a bit not as interesting as the others maybe, but still, thanks for joining. If you're new in here, once again, normally we have a lot of webinars, not that much the next 2 weeks, but this is the usual schedule. Next week we only have Tuesday, Wednesday, Thursday though, and the week after nothing, but then from the 19th, as I said, we'll be back in full swing. So thanks again. If you have a vacation, great vacation, and talk to you next week. Cheers. I think Nenad has maybe stepped away. I'm not sure if he's here. So also from Nenad, see you soon. Cheers.